course, we're doing a deep dive. All right, let's get started. Well, as you can see, I am still on the road right now. I am in Europe with my kids. So it is late at night here already. It is 9:30 at night, and this is why you see it's a bit darker than you're usually used to. But hey, I didn't want to miss it, and so I wanted to be here with you to tell you what's happening and talk about the important topic about trading for income versus trading for growth. Just wanted to make sure that you can all see me and hear me. I want to make sure that the internet connection here is stable enough so that we can get started. Okay, good. Let me take a sip of water and then we start looking at the markets here right away. Good, perfect. So let's see what is happening here right now. Well, it seems that I haven't missed much while I'm here in Europe. We're looking at the S&P 500 here, and the S&P 500 right now is trying to make a new record high, still struggling. And as you can see, the Dow Jones also struggling, slightly negative right now on Monday, August 17th, as we're looking at this. Now, talk about some things that stood out today. Nothing really going into the week, pretty uneventful week. Yes, President Trump said that he will impose more restrictions on Huawei, another Chinese company, but that's kind of no news, and markets are shaking it off. Actually, markets are kind of looking for some impulses to find some directions here. So let's just take a look at a 5-minute chart here of the S&P. As you can see, we opened higher, and then for most of the day, we were just diddling around. I mean, not really finding any direction here. So, but what stands out today? So there's a few stocks that are standing out, and one of them is Tesla. Tesla is still on fire. Tesla up today, earlier when I looked, it was more than 9%. Look at this right now. It is 11% up for today. For what reason? Absolutely no reason. There was an analyst from a bank that I haven't even heard before, to be honest. And he said that, you know what, Tesla might actually, the price target is 1900. Well, what a genius, right? Because right now it's already at 1831. So of course it'll go to 1900. But the analyst also said, be prepared for a big surprise next month. And so there's a lot of speculation going on. And this is why Tesla is making a new all-time high. S&P is still lagging. Boy, is it warm here in Europe right now. And no AC right now. So anyhow, this is why I'll probably drink a little bit more. Anyhow, so good to see you here. So good to be here with you. And yes, I'm looking a little bit to this monitor, to this monitor, to this monitor to make sure that we are okay. Because today I have a really fascinating topic for you. Something that was inspired by Donna during the last coffee with Markus, where she said, okay, you know what, if I have a larger retirement account, how should I trade it? What trading strategy should I use? And so this is why I thought today we're going to talk about what are we going to trading trading versus income versus trading versus growth. And yes, I am a little bit tired. Anyhow, let's get started. Are you ready? And I see I'm a little bit red here. So the beauty of being live here, might as well, right? Okay. So I see that Chris is here from Ireland. Says great show. Really appreciate it. Appreciate it. Good to see everybody. Andreas is here. Apfelschnutz is here. And Caleb is asking, no coffee this time. No, in fact, I've already enjoyed a beer. An adult beverage at this time of the night for dinner. And now I'm having a water with you. And yes, not my favorite mug. Okay, so let's actually hide this comment here. And let me prepare something on this screen, because it's very important what we're going to talk about today. Let me move this out of the way. Perfect. All right, so let's talk about trading for growth versus trading for income. And I want to prepare a few notes for you because I think it is very important. Let's actually start with trading for income. So what does it mean when you're trading for income? When you're trading for income, it means that your account is pretty big. And let's say, for example, let's just say $500,000, right? So it is already a larger account, and all trading profits are taken out of the account to generate income. Hence the name, trading for income. Jeez, there we go. Okay, so let me give you an example. So very specific example here. Let's say that on the $500,000 account, you would trade the wheel, one of the trading strategies that I like to trade on larger accounts here. And the idea here with the wheel is that you're generating approximately, let's say, 30% per year. So this would be $150,000. So just here, for the sake of our discussion here and to use a little bit round numbers, so this would be approximately $12,000 per month. I know it's a little bit more because if we divide 150,000 by 12 months, right, it would be a little bit more than 12,000, but you get the idea. So at the end of the month, and this is the idea here, there we go, at the end of the month or at the end of the quarter, doesn't really matter, depending on how you want to do this, you transfer any amount that is larger than $500,000 into your checking account as your income. So this is the ultimate goal as a trader. So let me just write it here, because this means that now you have brought your account to a decent size and now you're trading for income. So you don't want to grow your account anymore, and any excess profits that you're generating, you're transferring out of your account, or you can leave it in there depending on what your living expenses are. Now, again, if you want to make more than $150,000 a year, there's two ways how to do this. So let's actually talk about this. Okay, so what determines how much money you make? Well, there's two deciding factors here. The first one is obviously your account size. And the second is the percentage, right? The ROI, return on investment, of the trading strategy. Let me give you a few examples here. For example, the trading strategy, the wheel that I recommend you trade on larger account, generates around 30 to 40% per year. Now, you also know that I love trading the PowerX strategy, and I'm trading it every day. And when you're trading the PowerX strategy, you're looking to generate at least 60% per year. That is the goal of the strategy, right? So this is where choose the strategy that fits your lifestyle and that also fits your goals the best. Now, before we talk more about what trading for income and how to get there is, for a moment, let's talk about trading for growth. Because if you don't have a $500,000 account yet, or you don't have $1 million account, you need to adapt your trading style so that you can grow your account. You see, the idea here is to really start growing your account until you are at the level where you can trade for income. So trading for growth here is what you do. No withdrawals, okay? So let me actually move this a little bit up so that we can all see what I'm typing on the screen. There we go. No withdrawals. All money stays in the account. So that is very important, because if you start with a small account, and this is the idea here, so you start with a smaller account. And let's say you start with maybe $10,000 or $20,000, right? And now you have to trade it for growth. So how exactly do you do this? Well, again, first of all, no withdrawals. All the money needs to remain in the account. And this is where you would use money management to grow your account. And the money management method that I personally recommend and that I used to grow my accounts to a decent size is the fixed ratio money management technique. And I think it's very important that you understand money management. Therefore, I'll do a dedicated video on this one on how to do this. The important thing is that you use trading strategies that support money management. Now, this is where you'd also use trading strategies that generate at least 50% per year. So when you're trading for growth, I highly recommend, I mean, if I would have to trade for growth, I would definitely focus on the PowerX strategy and the PowerX optimizer. And then, as you know, probably also the wheel strategy, although, as you know, you have a smaller percentage here. So let's just summarize this here of what it means to trade for income and trade for growth. In the life of a trader, there's two steps. First, typically most traders trade for growth. You first want to make sure that you take your account to a certain level, and then once your account is at a certain level, this is when you start trading for income. At this moment, it makes sense that you can start taking money out of your account. And again, the question is here of how much money do you actually need to have in your account? And again, the two deciding factors here are your account size and also the ROI of a strategy. Now, I want to give you just two more very specific examples so that you know of how large your trading account needs to be. So let's say, so your income goal to generate with trading, let's say your income goal is $100,000. Okay, there we go. And now let's say $100,000 per year. We'll do some a larger amount here in just a moment. So if you have $100,000 per year and you're using a strategy like the PowerX strategy that has an ROI of 60%, now the question is, how large does your account need to be so that you can trade for income, transfer the excess capital out of your account into your checking account? Well, this is how it works. All you need to do at this point is take the $100,000 that you want to make and divide it by the ROI, which is 0.6, right? An ROI of 60%, you know how I express percent, it's 0.6. So at that moment, it means that you need to have around $166,666 in your account. You get the idea. Now, let me just give you a few other possible scenarios so that you know exactly what strategy to use and also how much money you need in your account. So let's say that here you want to make $100,000 per year, but the ROI of the strategy is only 30%. If this is the case, again, you use the formula where you use the $100,000 divided by the ROI, which now is 0.3, and you arrive at $300,000. So if you have a strategy that generates 30% per year, you need to have more money in your account, right? This is why it is so important that you have these two variables, the account size and the ROI of the strategy. There we go. Let me give you a third example. Let's just say that you would like to make, let's say, how much would you like to make? Maybe $200,000 per year? Why not, right? So if you want to make $200,000 per year and you have a strategy that has an ROI of 60%, in this case, again, you're trying to move my cursor there, the $200,000 that you want to make divided by 0.6, the ROI, and you will arrive at around $333,333. So now it's up to you. You know how much money you have in your account, and if you don't have enough money yet to trade for income, this means that you're in phase one. Let me go back here, that you're trading for growth. Again, when trading for growth, this is when you definitely need to use money management to grow your account. When you're trading for income, you're no money management needed. to grow your account. All you need to do here is proper position sizing. Anyhow, again, I know that it's a little bit dark in the background because I am traveling through Europe right now, so it is late at night. But I hope that this helps you to understand what are the main differences between trading for income versus trading for growth, and that you also now know exactly how much money you need to have in your account based on the trading strategy that you use, so that eventually you can trade for income. Because once you're there and start trading for income, this is when the fun starts. Is this helpful at all? Because if it is, do me a favor and click like. And if this is your first time and you thought, oh, this was pretty cool, then please make sure to subscribe to the channel and also hit the little notification bell, because this way you get notified whenever I go live or release a new video. Okay, hope this helps. Hey, talking about other videos, there's probably a few other videos popping up on the screen here right now. Just click on any of these that make the most sense to you, and I'll see you in the next video. Now, as you know, obviously that does not apply to you. And this is where let's actually just take a look at the questions here to make sure that I did not skip anything, or, as sometimes it happens, might have an error in my math, God forbid, but we use my handy dandy calculator, and this is how we can double check. This is why we do have these handy calculators that help us tremendously with the math. Okay, so let me just catch up here. And again, I'm looking at a different screen, so my setup here is different. Let me just make sure that I see most of these questions. Okay. So Peter asked earlier, in Europe, don't they go out for dinner around 9 p.m.? Peter, it really depends where in Europe you are. Yes, in Spain, you definitely do it. Right now, I'm mainly in Germany. We have dinner around between 6 and 7 o'clock. So I did already have dinner. Okay, so let's talk about trading for income versus trading for growth. Jim says, I want to do both. Trade for income, increase my large account, thus increasing the trade for income amount. You see, Jim, it's an interesting comment. So for me personally, right, I have my income goals for the year, and honestly, they change. Here's why. In the beginning, you see, in the beginning, my goal was to actually just replace my income that I had with IBM. Now, when I left IBM, I made approximately $150,000 annual salary. And this was my first goal, to actually make this in income with trading. So therefore, I chose a strategy that gives me at least 60%. And then I also wanted to make sure that I had enough capital in my account. So this is where I was trading for growth until I hit this threshold level. I don't want to do math in my head right now. This is probably at this time of night, not a good idea. Anyhow, so then after this, I realized, you know what? I would like to have $250,000. And so when you want to have more money for income, this is when you go back to phase one. Let me actually show this to you. So here, first you trade for growth until you're at a level where you can trade for income. But then you see this number might change. In the beginning, you might be happy to make $100,000. And when you see, oh my gosh, I can make $100,000 with trading, then you might increase your goal to $150,000 or maybe even $200,000. And this means that you need to go back to trading for growth, that you bring your account to the next level here, right? And then you're trading for income again. Jim, is this making sense? So it's usually that you don't do both. You either do one where you bring up your account, and honestly, in the beginning, if you have a smaller account in the beginning, I would not take, let's go back here, I would not take any money out, because if you withdraw your money from a smaller account, it just takes you longer to get to the stage where you can trade for income. Anyhow, great comment here. So, and Ricardo is asking, is it not dangerous to open such a big account with a broker? I mean, they are not a bank. That is absolutely true. However, some brokers are FDIC insured, and some brokers have been around forever, right? I mean, Ricardo, I know that you're using Interactive Brokers. I've been using Interactive Brokers since 1999 or 1998. That's now more than 20 years. they've been around forever. If you think about brokers like TD Ameritrade or Schwab or Fidelity, I mean, we talked about brokers that are scam, and we talked about reputable brokers. By the way, I did do a video on this. I'll post the link in the description. I talked about the best brokerage in 2020. So as long as you go with the reputable broker, it makes sense. And then also, if you really want, you can have multiple accounts with multiple brokers. Right now, for example, that might actually make sense, because I don't know how many of you are with Think or Swim, TD Ameritrade. I've heard that the platform right now, the desktop applications, has problems. So you either have to go through their mobile app, which seems to be just working fine, or it seems that they have a special link that you can go through right now. Anyhow, so I personally do have, I have two brokerages. I'm using Interactive Brokers and Tastyworks. If you would like to learn more about Tastyworks, it's actually right now my preferred broker, my broker of choice. Just go to rockwelltrading.com/tastyworks, and this is where you find more information. Anyhow, good. So Hans says, if the money is in the bank, you will have to pay the interest in the future. Not quite sure what you mean. And you see right now, think about it. High yield checking accounts. Because my kid, Julius, is about to start college. This is one of the reasons why we are in Europe right now, because we're looking at a college here in Germany, because he might start a college here in Germany and then go back to the United States. Anyhow, since I know that I will have some expenses, I thought I put a few $100,000 aside, and I did put it into a high yield savings account. And this before all this crisis hit, and I got 2%. 2%. It's a joke, right? But since this is money that I really wanted to set aside, I got 2% there. Guess what? Right now, since we have the crisis going on and interest rates keep dropping, this is where right now I'm only getting 0.5%. So, I mean, don't rely on banks and putting money in bonds or in CDs. You're not getting anything, and you're probably not getting anything in the foreseeable future, because we have heard the Fed. The Fed clearly said, we will keep interest rates low for the foreseeable future. This means for the remainder of this year, probably also for most of next year. Anyhow, so let's see. Caleb is asking, if I cut my expenses in half, I can trade for income on an account half the size. That is true. And here's the deal. I mean, Caleb, true story. When I moved to the United States, when I left IBM, for me, it was more important to have freedom than have a luxury lifestyle. In the beginning, I moved into an apartment. So I moved out of the house in Munich, which was close to the castle of Schloss Nymphenburg. So it was beautiful there. And I moved into an apartment, which was a step down. I did sell my nice Beamer, and instead I bought a used Ford. I believe, yeah, it was a Ford Expedition that I bought for only $12,000. So Caleb, to your point, I really kept my expenses down because I wanted to be able to trade for an income as quickly as possible and make sure that I can cover all my living expenses. And I told you, my first goal was to replace my income with IBM, but to be honest, I think I lowered my expenses to a point where I could get by with probably $50,000 or $60,000. Now, it didn't last very long because it took me a year. Yeah, honestly, it took me a year to figure it out. But after this, it worked well. And so this is why after living in an apartment for a year, I started moving into a house. Anyhow, small starter home, not a big deal, right? I mean, it was a 4.2, 1,800 square foot. So I didn't have the lifestyle that I'm having right now, where I'm traveling first class, right? And you know my lifestyle, where I have way more cars than I should have, and all the kind of stuff. So Caleb, I think it's a great idea to reduce your expenses in the beginning if your main goal is to be able to trade for a living and to really get to the point where you can trade for income. Okay, good. So Jim is asking, so would you put $500,000 in the wheel calculator and your five positions are just be very, very large? Actually, they're not that large. We can actually do this here if you wanted to. So since you talked about the wheel, we are actually looking at quite a few. Let me share my screen here with you. So we are looking at a few positions to establish. Didn't find really anything super interesting today. As you know, we got assigned in Uber. So if you got assigned, this where right now you're selling calls against it. But take a look at this here. And I'll make it a little bit bigger. That is easier for you to see. So let's go to 150% here. That might be a little bit too big. 125%. Okay, so let's talk about Boeing. It's a stock that I'm actually looking at right now. Didn't like it today, but maybe over the next few days, we might get into Boeing. We might get into Valero. We have been looking at Play. So there's a few stocks that popped up. So let's say that instead of $100,000, you would go for $500,000, right? So that's what you can do here with the wheel income calculator. You just increase it to 500,000. So think about it this way. If you're now looking at Boeing, ignore the other stuff. I mean, I didn't fill it out here, didn't plan to really share it here on Coffee with Markus, but since you asked. So this means that you would actually trade 6 options on Boeing. I mean, think about it, Jim. Is that a lot? Is this a large size? Trading 6 options on Boeing, and actually, if you're getting assigned, you're trading 600 shares? Not really a big deal. You see, for Valero, a cheaper price stock, you would trade 20 options. 20 options is not size. It's not a big size. I mean, it's a decent size, but it's not really a big deal. So trading 20 options here is absolutely doable. I mean, these are stocks. These are blue chip stocks pretty much, right? I mean, big stocks, big names where you have lots of volume going on. So this is not a problem at all. Jim, is this helpful? Is this making sense? Okay, so yeah, it doesn't really yield into a large position size. Again, with Valero, you would trade, what, 2,000 shares? I mean, 2,000 shares? Come on, this is not really a whole lot. Okay, so so good to see you here. Actually, I'll contact you separately. Mark might have contacted you because right now said I'm traveling, so I don't have that much time. But I appreciate the feedback, and we will definitely get back to you. And so Benito says, Jim, with such large positions, you can start moving the markets. No, I mean, seriously, if you're trading 6 options, 6 contracts on Boeing, you're not moving anything. Nobody will notice you with 6. If you're trading 20 options on Valero, you're not moving the market. Yeah. So slow down, hold your horses, put it into the calculator. This is why I'm giving you these tools so that you can plug it in there. And then you'll see it's not really that big of a deal. Okay, so Caleb is asking, could you take slightly riskier trades with the wheel as a growth strategy? Well, you could trade it in a margin account. And while you are, let's actually go back to this. That's another thing. While you are trading for growth, it does absolutely make sense to use a margin account. Now, again, leverage is a double-edged sword. It can work for you as against you. But a margin account basically means if you're putting $10,000 into it, you're getting $20,000 buying power. So when you're trading for growth, I highly recommend that you use a margin account. And Caleb, oh, geez, I was planning to share my screen here. Okay, so this is where I said, okay, use a margin account. This is what I added here. So when you put $10,000 into a margin account, you're getting $20,000 in buying power. Okay, let me come back here to the screen. Yes, I know, I forgot to share. I know. So this is where instead of making 30% a year, you would make twice as much because you have twice as much buying power, right? So you would make 60% a year. Caleb, does this make sense? So you can trade, you don't have to take riskier trades, but since you're using leverage and buying power, this is how you can double the percentages here. Anyhow, good. And Caleb says, yeah, number 1, work to get $10,000 to trade for growth. Absolutely. Honestly, I really believe you should have $10,000. You can get started with $5,000. If you don't have $5,000, don't be desperate. I know that there's others out there who promise you can get started with $500 and turn it into hundreds of thousands of dollars. But come on, I mean, seriously, have you tried that? You'll see that you usually lose your money quicker then you can count to what, 10, 3, 20, doesn't really matter. So realistically, you do need $10,000. So therefore, absolutely, you are right, Caleb. Hey, there's Mirko. Greetings from Germany. Thanks for the wheel. Works well. Yes, it does, doesn't it? Mirko, where in Germany are you? I'm just curious. I have been in Würzburg because this is where the university is that my son is considering visiting. Then we went to Munich, and then I will go to Hagen, which is just east of Cologne, because this is where originally, before I moved to Munich, I grew up, and this is where my parents' house is. Anyhow. Good, good, good. All right. So actually says from Belgium. Let me know when you are coming around Brussels, or I can come with some Belgian beers. Maybe. Okay. So we'll see. Right now, I'm not quite sure how long I'll stay in Europe. So it's either until the weekend or a week after. We will see. Okay. So Peter says, I enjoyed this video. I will have a three-phase system, learning, growth, income. Peter, you couldn't have said it better. Yes, absolutely. I should probably add this as the three phases of a trader. First, you gotta learn and you gotta have the right tools. Without the right tools, you're fighting a fight that you're bound to lose because you're trading against the smartest traders in the world, right? I mean, you're playing the game of games. You're fighting in an arena, and you want to have the right tools. So yeah, absolutely, you want to learn, be prepared for this. Then you want to trade for growth, and then ultimately for income. Scott says Würzburg was nice. I was stationed in Fulda. Very aware of Fulda. Absolutely. Okay, Lance says, would you recommend taking out a line of credit against your property to increase your account size? So here's the deal, Lance. Great question. Keep in mind, trading is risky. You can lose money. So never ever trade with borrowed money unless you know that you can make money. Just keep in mind, it can happen that you would lose that money, right? I mean, obviously, if you apply smart position sizing, smart risk management, right? Use the 2% rule that you know, and you know my style. I'm a super conservative trader because for me, it's all about capital preservation. Yes, you can trade more aggressively. You can maybe make more money, but then you see, the profit is a function of the risk that you want to take here. So be super, super careful with this. And I should probably tell you, don't do this. However, you're all adults, right? Keep in mind, you can lose money with trading, not necessarily because the strategy is bad, but the markets can be wonky. You have seen it recently where the market just plummeted like crazy. I mean, they have bounced back, so not a big deal. Secondly, it is often traders that start imploding, right? Because we talked about having the mindset of a trader. So important here. Anyhow, so be super, super, super careful to trade either with other people's money. And this is what I consider here. It's not only from your relatives, from your family. This would be the bank's money, and it's other people's money. Be super careful when you do that. Okay. So, okay. So GeoTim says SPR is down $1.50. Should the put sell on the power income be canceled? No, why would it be? I mean, let's jump back here to the screen. Let's actually take a look at SPR. Why not, right? Since it's trade that we took. So SPR, let me bring it up here. The idea here is for SPR, we want SPR to be above 18 by September 18th. Let me show you, by this time. But look at this. Above 18. Right now, it is still at almost 21, at $20.91. So I'm not concerned about this. I mean, give this trade time to work out, right? I mean, this is how these income alert trades work. This is how the wheel works. Anyhow, good, good, good. So let's come back here and let's see. Sam is asking, what do you think of First Trade Broker? I'm not too familiar with this. Not quite sure what they do. I haven't heard of them yet. Again, Nicole just posted right above your comment, the best brokerage account 2020. I actually compared 5 of the most popular brokerages. And this is where I told you what I know and what my criteria are and why I chose the brokers that I have my accounts with. And take a look at this video. You probably find it super helpful. Okay, Odie says, toss was terrible this morning. Seems that they are struggling right now. As you know, I mean, a few months ago, Robinhood's trading platform went down. I'm super surprised because TD Ameritrade and Thinkorswim are super, super solid, right? So, but as you know, they're merging with Schwab. No idea what's happening there. I haven't seen any information what it would have caused the outage. All they communicated thus far, let me actually show you, because I did go to their Twitter feed to see of what's happening. And you see all they say is, we regret there are Thinkorswim desktop issues today. Please use the Thinkorswim app, our TD Ameritrade mobile app, or our website until it is resolved. And this was from earlier this morning. So this is all we know. They haven't communicated anything else of what is causing the issue or when it will be resolved. They just said, hey, we have issues and we're working on them. Okay, good. Let's come back here. And okay, Cinepost says, dumb question, should we ever trade stocks in regular brokers that charge big commissions? Honestly, no, because these days commissions are zero. If your broker is still charging you a lot of money in commissions, it's usually a so-called full-service broker, and this means that this full-service broker is recommending to you what you should be trading. If you are a true trader, you don't need this. I mean, I don't need a broker to tell me what to do. I make my own decisions, right? So take a look at the video that I did, the best brokerage. Post a link in the description, and I see that Nicole has posted it in the chat here. Take a look at this, and you'll see I compare commissions as well, and you'll see that commissions are pretty much almost zero. Sometimes you pay a few cents per contract, but I would stay away from brokers that charge big commissions here. Okay, Paul is from San Antonio in Texas, learning a lot from you. So good to see you. I'll be back in Austin soon. I mean, probably the next couple of weeks. We'll see. We'll see. Okay. So Wolfgang says, I'm new here. Is there anybody from Germany? Wolfgang, you might be surprised to hear that I'm originally from Germany. That's the accent that you're hearing, right? I mean, there's probably a few more here from Germany as well. Okay. So Michael is asking, did you have one beer? Yes, I promised. I had one beer. I was tempted to have second beer because, again, right now it's very warm, and in Europe, as you know, not a whole lot is air conditioned because it's rather rare that it is that hot. So I was tempted, but then I thought, hey, I jumped live here on camera, and I wanted to make sure that I had one beer with dinner and now water. That actually tastes really good. Okay. PKO says German beer glasses are 1 liter. Well, I said I had one glass. Didn't disclose the size. Shh. Don't spill my secret here. Okay. So good to see you. Okay, Peter says, on the wheel, you have not really talked about the upside of getting assigned and the price going up. Peter, you're absolutely right, because, I mean, if you have been following me for a while, you know that I always like to talk about the risk first. There is risk in trading. You need to control your risk. You see, once you learn to control your risk, the winners take care of themselves. But yes, we got assigned in Uber. If Uber keeps going up, let me just show you. I'll be happy to show you here. So let's talk about Uber. So Uber, we sold a put and we got assigned by 1 cent. I mean, this was just like, are you kidding me? But it doesn't really matter, because here's the deal. What we did now is, since we got assigned here, and right now it is just trading at 29.48. We got assigned at 30. So not a big deal. It's down 51 cents. So now we sold a call for the strike price of 31. So let me show you of what happens if now Uber only goes up to 31 by the end of the week, which, by the way, if you look at the chart, is very likely that it's going to happen. You see Uber found some very strong support right here at around 29, even today. So the low today was 29.14, and then Uber bounced right back. So This is where, again, we can take a look at our income calculator here, and just want to make sure, yes, I am sharing the screen here. And with Uber, this is where we go to part 2. So it's really interesting because I sold 7 options, so I should have been assigned 700 shares, but only 400 were exercised. So I have now 400 shares, and I bought them at $30. And now I sold calls. I sold 4 calls, you see here, 4 options to trade against it, and I got 40 cents. So this means that I collected $200, and I did this earlier this afternoon. So this afternoon, I just stopped really for 5 or 10 minutes, got the 50 cents here, got the $200 deposited in my account. So days to expiration, 11 days to expiration, and the premium per day is 18%. So $18. Analyzed, this would be 55%. However, if Uber gets up to $31, which is very likely, we would make a total of $600 on this trade. And you know, with the wheel trades, usually make around $200 as you would do here. But now suddenly, yes, you're making more. But Peter, to your point, you see, the winning trades take care of themselves. And you have more than enough people on YouTube, in webinars, talking about all these fantastic gains that you can make. You see, for me, I have learned it the hard way that you gotta manage your losing trades. Once you learn how to manage your losing trades and have small losses, right, the winner take care of themselves. But Peter, good job. So Michael says, I started late, so I'm behind. You know, happens to everybody. The great news is you got started. Think about what would have happened if you had started in 5 years from now. I'm glad that you got started now. Don't worry about the years that you lost, right? That you could have started earlier. Just be proud on yourself that now you started it. And if you're watching the video right now, whether it's Michael or anybody else here, I really hope that you're committed and say, you know what, I'm getting started now. Because if you wait any longer, what will happen, right? In a year from now, you wish you would have started today. Isn't that the truth? So I'm so glad that you're here. I'm so glad that you're watching this video. I'm so glad that you're interested in trading. I'm so glad that you want to learn how to trade the right way, how to manage your risk so that the winners take care of themselves, because that's how you grow accounts. Okay, so let's just see if we can take one more question here, and then I'm going to wrap it up because it is getting late. So Hans actually asked, is trading options ethically correct? Since it can be a game with winners and losers and is not providing new products to the economy. Well, Hans, so here's the deal. There are people who are trading, right? There are people who are making money. There are people who are losing money. As traders, we are providing liquidity. So as traders, by taking the other side, think about it this way. If you wouldn't place a trade, you would not take the other side of another trader. See, when you want to buy an option, it means that somebody else wants to sell the option. This is called the market. It is called the economy. And think about it this way. It's pretty much like all products. If all people would stop buying products, our economy came to a crashing halt, right? So here, I mean, it's a fair question because you don't actually see the physical product like a pair of shoes or a pair of jeans here. But yes, absolutely, as traders, we are providing liquidity and we are helping other traders who want to get in or out of a position. See, again, when we want to buy an option, somebody else is selling it to us. We don't know if he is selling it to us with a profit or with a loss, right? I mean, he could get out of a winning trade, he could get out of a losing trade, or he can get into a short-term position here. So you never know. And yes, I believe it is very ethical to be a trader, to provide liquidity in the system, because that's ultimately what the markets are meant for, right? I mean, there are people who are hedging. We are speculators. We are not hedgers. We are speculators. But without speculators, hedgers wouldn't exist. And without hedging, the economy would be really in a bad shape. You would have prices all over the place, right? But this might be a subject for a different coffee with Markus. Okay, anyhow, so good to see you all here. Sorry that we started a little bit later today. It wasn't that easy to make sure that the internet and the connection was good. I hope that you enjoyed today's episode, and I hope that this was helpful to see what is trading for income versus trading for growth, and also that you see a little bit of the math behind it, because you know me, I like to use math because trading and money is math, right? And we want to put the odds in our favor. I will be back here on Wednesday, so that is my plan. From a different location again on Wednesday, but I'm very much looking forward to this. So stay tuned, make sure that you subscribe to this channel. Feel free to share this video with everybody who might find this helpful. I always appreciate when you're sharing it. And before we go and before I sign off, quickly hit the like button. Click on like right now, and I'll see you in the next video. Good night, or have a good rest of your day. Take care, everybody.